Welcome to Stocks in Translation, Yahoo Finance's video podcast that cuts through the market mayhem, the noisy numbers, and the hyperbole to give you the information you need to make the right trade for your portfolio. I'm Jared Blikre, your host, and with me is Yahoo Finance senior reporter Brooke DiPalma. The people's voice is on assignment. Brooke is here to keep us on track and from getting too wonky. And today we're going to be talking about the professionals who work on and off Wall Street and help us with our investments. That leads into our phrase of the day: private markets. We talk about the public markets all the time, but what was once reserved only for the wealthy is now coming to the average investor, for better or for worse. And this episode is brought to you by the number 41%. That is a share of millennials and Gen Z who say they would let artificial intelligence run their portfolio. Would you trust your stock decisions to AI? And today we are welcoming Margaret Franklin, who is not only a CFA or Chartered Financial Analyst, but the first woman to head up the CFA Institute, which is 200,000 strong around the world. She has over 25 years leading wealth management teams on Wall Street, and under her tenure, the Institute has pushed deeper into private market education. So Margaret, 2025 has been an incredible year. I've been in the business for about 3 decades now, and I don't know that I've seen a wilder change in finance, which is usually kind of stodgy and very slow to change, but lots is happening right now. So
you got it.
What's your overview?
I think you're absolutely right that it's been a wild year. Uncertainty is, you could put that up on your phrase of the day, and that's because of the unpredictability and unreliability in so many things. Geopolitics, obviously, right at the forefront, understanding changing regulations, implications with interest rates, inflation, and how they relate to policy are really dynamic.
Dynamic.
Good word there.
Yeah. All right, we're going to move on to our phrase of the day here, private markets, and just a brief definition. Private markets are investments that are traded off exchange, like private equity, venture capital, might have heard of that, private credit, real estate. We're going to break down some of these terms, but private markets are accessed directly through funds, and they tend to be illiquid when you compare them to their public market counterparts that trade on exchanges. And this means they need to be held for longer as well. And there are a lot of trade-offs here, but tell us how some of these private investments that used to be available only to the wealthy or accredited investors back in the day, how they're coming to people with, I guess, lower access, lower gates.
Yeah. So I think this has been part of the financial innovation that's occurred at speed, and that is the ability for an individual, and we expect it will make it to the retail market where they can access private markets. And private markets, sort of at their core thesis, are actually very valuable. These can have added tremendous returns for some of the most sophisticated investors in the world. Think about the pension plans and sovereign wealth funds. And it's really getting into things like infrastructure, as you said, real estate, companies that will not be listed on the public markets. And as ever, there's no free lunch. So the things that we think a lot about are what are the fundamental things that have to occur for portfolios to succeed, for investments to succeed. Mm-hmm. And then when you think about that in a private market sense, what are the challenges that are unique to them? So we can talk about that probably.
I guess for someone who's never even been exposed to this,
right,
who has never had the opportunity to lean into this, where do they even begin?
So I think maybe 2 dimensions that you want to think about. One, what is it at its core? So, many people will have had the opportunity to think about a business, maybe from a family perspective, or something we see, for instance, in private markets right now is the roll-up and consolidation of dental centers, right?
Yeah.
Sure.
So you know that these are generally small businesses, and now you can roll them up and create them one thing. Well, not all dentists' operations are the same. And so these are things that just don't have necessarily the heft or the diversification principles that a business might have. They also suffer from, come with, and you get paid for, if priced properly, for the illiquidity. So it's almost like your house. The markets may come and go, you get a daily valuation. Your house doesn't get a daily valuation. You don't think about selling your business on a dime. And that's the way to think about private markets, is that the pricing is different. the transparency and availability of the information, very different than public markets, which are regulated. They have to disclose things in particular ways that make them comparable, standardized, transparent, reliable. So these are really important features, and they can be reconciled if you get the pricing right. And so that's going to be a key consideration as we open up these markets.
You hit a key phrase for me, transparency. Like how is the market adapted to the fact that people with lower time horizon or less time horizons, in other words, they might not have the deep pockets to survive a long downturn, they might need that liquidity. How is the information being presented to investors in such a way that they can successfully evaluate these things when you said, as you just said, a lot of it's not regulated the same way the public investments are?
Yeah.
So really, actually, you've touched on two things. First of all, the way to think about private markets is how are they sized in your portfolio? So a lot of people will have a number of goals that they're trying to achieve. One will be retirement, one might be for education, buying a house, and then there'll be more immediate things. So this is the part that's attached to your really long-term
So you don't have your whole portfolio.
You definitely
Yeah.
don't have your whole portfolio. And really, actually, depending on that liquidity, how much money you need at any one time, and an advisor can help you with that, is how much you're gonna put in there. With regards to transparency, though, you really just don't have the same information. And as you said, these will often be available in a fund structure, and again, the descriptions and information are both opaque and not as comprehensible.
Yeah,
For-
go ahead.
For a young investor, what would the timeline look like? How much time should you give this? And is there the case, it sounds kind of risky, is there the case where it actually doesn't pan out, maybe as you see with the return that we're seeing right now in public markets?
So you've hit on something around the time horizon. Typically, we've thought of private equity, which would probably be different than venture capital. You start to think historically 7 to 10 years. But with that short-termism that's coming into the market, it's causing those time horizons to shrink down to 5 years. And we've done a paper on private markets governance at the fore. You can get it on the website. It's publicly available, and it'll walk through these things. But as the pressure to go shorter and shorter, that has unintended consequences. And, you start to see behaviors that are really not necessarily in the investor's best interest. If you're a really young investor, my son told me to back up the truck for
Crypto?
GameStop.
Is it
For
GameStop? All right, that's
GameStop,
short term.
when but actually we would have had quite a run if we gotten out. But I said, we don't understand this. He's in his 30s. So
Yeah.
but I think this is the whole thing is what can you afford to lose and have that money locked up.
Yeah.
I want to ask you about tokenization. That seems like we're just getting started here.
Yeah.
And in fact, Robinhood was just offering shares of OpenAI and also SpaceX to European investors. And it looks like a lot of the measures that the administration is pushing and that have already come through Congress are kind of going in that direction. And that's a total veer off course from the way capital markets as we know them, the equity capital, like the stock market, the bond market. It's a radical departure. Where do you see that going?
So tokenization actually can have great utility because all of a sudden you can take things that just simply wouldn't have been available. Let's take a look at infrastructure, real estate, private
Sure.
markets. These actually can be affected in a portfolio by tokenization. What I will say, though, is on the Robinhood thing, as the companies came out and said, actually, they bear no relationship to us.
Yeah, the companies did not like that.
Right.
Robinhood just did that.
Right.
But as illustrating where the trend is going, do you think you think your colleagues over at the CFA and the people that you kind of spearhead here, are they ready for this?
Yeah.
So we've done quite a bit of research. Again, you can go to the website. We have 2 excellent pieces on tokenization. What I do think is that the fundamentals of building a portfolio and the things that we teach in the CFA program endure. The application of them with either tokenization or private markets is the part that how you bring it together, how you evaluate them, and how you look at the idiosyncrasies of those asset classes, really important.
All right. I think we're going to pause for a short break here. But coming up, we're going to be talking AI trading stocks in and out of your portfolio and a runway showdown featuring an unprecedented 4 contestants on 4 catwalks. Stay tuned for the trailblazing adventure. This episode is brought to you by the number 41%. That is a share of Gen Z and millennials who say they would let an AI assistant run their stock portfolios. And I'll add this stat. It's nearly triple the boomers rate. And all that's according to the World Economic Forum. So it looks like the younger generations are kind of leaning into this, and it's a new area. So maybe it'll end up being a bad decision, but you can't help but think that AI is going to be running the show in a lot of portfolios in some period of time, maybe a few years.
So I think where you have rules-based, AI becomes very applicable. We're already starting to see that.
Smart
in
beta
portfolios.
ETFs, we have those.
Exactly. You've got it. What our data shows, though, is that Gen Z is also very interested in human advice. And why is that? Because AI, prone to high output variability, right? The outcomes you could...
We call them hallucinations.
Same thing.
Yeah.
Well, there's hallucinations, but you and I could be looking at the same inputs and coming out with different answers. So there's a high variability. They're pretty skeptical on AI in totality to run everything. So I think what you're going to see is what we call AI plus HI, artificial intelligence plus human intelligence, which is the human in the loop. We're seeing the acceleration of AI being used for things that can be automated. And we're also seeing AI and large language models for augmentation in portfolios. I think what you're going to see over the coming years is a changing nature where the data and the applications are dynamic. And so we'll, for instance, define risk differently. How we think about those competing objectives, we can do better. So I think digitally native millennials, Gen Zs are going to have a different expectation, but I don't think it will around technology and digitalization. I just don't think it's going to be exclusively AI and digital.
Do you think that it could give young investors maybe a leg up in this sort of environment? Are they coming to more of their financial advisors having done research with these chatbots?
Maybe a bigger leg up than in previous generations when people, younger investors didn't have that much guidance at all.
Right.
Well, I think we're going to lay bare that we talked to as we were just before we started on the jargon and the transparency or lack thereof that individuals have had. So I think it's going to be the same thing that we see with healthcare and doctors. You're going to have more information, and AI helps you put that into plain language. So I think you're absolutely right. You're going to come better prepared to have a conversation with your advisor. You're going to be better prepared to think about all the things to consider to have really successful outcomes. Right now, we tend to say, did I beat the S&P 500? That's not really an objective. An objective is I'm saving for a house. I want to make sure like my income stream isn't actually so solid. So I really need to think about how I structure my money such that I can withstand those interruptions in my income and still make sure that I'm saving for the future. And I understand how to do that.
I just want to back up for a second. Can you tell us what it takes to be a chartered financial analyst? And just tell us a little bit about the organization and what you do on a daily basis.
So chartered financial analyst is kind of the most prestigious, it is considered the most prestigious qualification for the investment profession. And actually, I think that is more than just a classic investment analyst or portfolio manager. We see people wherever there's a capital allocation or investment decision making, so in financial planning and analysis, corporate strategy, iBanking. So it has great applicability. Takes about 300 hours per level. And
there are 3, right?
And there are 3.
That's 900 hours by my math.
And there are 200,000 around the world. So it is really, really prestigious. We made significant changes to the program to add more practical skills modules, and candidates will be able to see that we are very focused not only on the knowledge, that foundational stuff, which really actually does endure. I still find it very applicable, sort of 3 decades in, but much more ensuring that people are job ready. We know employers want it and candidates want it. So we're really investing heavily, and we're using AI to help us do
All right.
Ah, look at that. I was going to ask, what is the biggest challenge that you see maybe new recruits come with? Are they fearful of this uncertainty that exists and, being put in that position where these are people's livelihoods that they're putting on your plate?
So I think everybody at this age who's looking for a job coming out of the graduate survey, I mean, they're all anxious about getting jobs. Finance continues to remain one of the most attractive sectors, and we really have been competing for decades with tech. So you're starting to see it come back. What's so exciting about this generation is they really care about purpose. And so
that's a break from history. So, I mean, just to be a little bit cynical.
Yeah, but they want to know that they want to be paid fairly. They want to do interesting work, but they want to have it relate to something with purpose. So I actually think this generation, they're going to tackle climate. They're going to tackle some of the big things that are existential for humanity. And that can only be done through the proper allocation of capital. And so we're really, you want your best and brightest. And I think the way we define AI being able to teach these skills means you can bring people in from different disciplines. And we see employers starting to look more at the native capabilities and sort of critical thinking traits, and then they can train people. I find that really exciting because we'll get, you do want enough diversity in the system so you can see round corners. You have different experiences, different capabilities. Everybody has something to do, but teams are certainly a critical feature of the industry right now.
Any surprises with AI coming to market here, and then use cases maybe like, oh, I never thought about it. It just seems like it's permeating everything.
Yeah. So I would say a year ago, the subject matter experts were really frantic, very anxious about their own roles. And actually what we learned very quickly was the subject matter experts became the top of the heap. They know how to frame the questions. They know what inputs are good. Grinding middle gets done by AI. They're able to evaluate the outputs really well. We've really seen huge acceleration in and expansion in what AI can do. So organizations we see are using it everywhere. I think it's both really thrilling and very daunting.
Do you think it's really disproportionately affecting some of the younger people in the industry? Because as you said, it's that grinding out work that a lot of times is getting replaced right now. Is there going to be a pipeline in the future for the younger people trying to get in?
So I think, and we've actually wrestled with this internally, you still need to know those underlying fundamentals, which is why the CFA program remains so relevant. But the skilling, reskilling, and upskilling is going to be always on. And so I think almost all sectors are saying where you have, for instance, knowledge or expertise, how do we compress some of the apprenticeship time and get people job ready? But you're still going to need people who know what they're doing. I just don't see the models taking over everything.
Right.
When you think about the future, though, when you think about the path, the journey, maybe you said that people are sort of switching into this. What sort of opening up opportunities does AI give them a leg up in, or give them experience to sort of get into these roles? Is that how recruiting, you said a little bit there?
So I think the big FIs are still looking for talent. They're looking for critical thinking. They're looking for the way that you show up in some of the soft skills, right? Communication skills, leadership, and teamwork. These are things that they are looking for, critical thinking. And then they can really train, people to do it. And that's where CFA Institute.
Now, is the older generation not able to sort of keep up with this?
So,
loaded question.
What's that line? Yeah. What's that line that AI isn't going to take your job? Somebody who knows how to use AI is going to take your job.
Yeah.
I mean, I don't know about you, but I use it every day for myriad activities, and and most firms are spending time retraining their people to think about how to incorporate AI into their daily work. That is real change management through organizations. And so the most advanced and the most progressive are really thinking about how do we get ahead of it and really start to apply it. And of course, AI is becoming very democratic, right? You don't have to code.
Right.
All right, we're going to stick with the topic we've been talking about here. A little bit of a pivot, because today's Runway Showdown is a private markets Royal Rumble, 4 catwalks, 4 channels to funnel money, and only one winner. Striding in from the north, we have private equity, sporting a tailored LBO briefcase, that stands for leverage buyout, by the way, and an 18% target internal rate of return. To the east, we have venture capital, rocketing in with a hoodie and 10-bagger dream. From the south, we have private credit, bringing in pinstripes, a senior secured safe, and an 11% yield. Finally, and not least, holding the West is real estate, rolling out in blueprints and a 6% capitalization or cap rate. So our question for you, Margaret, which strategy should win the allocation crowd in the current market environment?
Dun, dun, dun.
And you can have more than one answer, too.
I would say, so let me put maybe a little bit of everything. VC right now is showing the most promise. Of course, private credit, if you can actually do the due diligence on the private credit, and it's I think you've characterized as a yield. You know, there's that. Remind me the other day. Oh, West Coast real estate. Oh, location.
Yeah.
You really want to know where that is. And what was the other one?
Let's see. We got private credit, real estate. We got venture capital and private equity. So private credit.
So private credit's pricey, and with everything, I'm going to caveat
And
it.
that's a little untransparent, non-transparent too. So.
I'm going to say you really need to know what's in those things, and I would say a little bit of VC, a little bit of private credit.
All right, we have a little bit of time left. Just tell us about your life and how you came into this role at the CFA Institute. Did you anticipate this early on in your career?
No. In fact, I didn't start out in the industry. I would be maybe one of those people that I described. I came from a marketing background, market analyst, and then got into it. We would have killed for the data, and the people around me all had their CFA. So I thought it was a very interesting industry. Have done institutional and private client for almost 30 years, and then 6 years ago, the CFA Institute came looking for somebody, and I had been on their board, so I knew them well. And I'm somebody who comes from a very modest background. I'm the first person on my father's side of the family to finish high school.
Wow, congratulations.
And this program for me actually was the linchpin to being able to have a successful career. I couldn't have afforded by cost or by time to actually go back and do an MBA or a Master's of Finance when I finally got into the industry. So I got very lucky that I was surrounded by people who all had the CFA and encouraged me to do it.
That is a compelling pitch. So yeah, definitely we learned a lot about the CFA Institute, what it takes to be on Wall Street, and also I really found the discussion today fascinating about the private markets, and we talked about how those are changing too, how everyday average investors are getting more access to them, but it's a little difficult sometimes to do the due diligence, to read up on these investments. So you got to still do your homework, and always remember that a lot of these are illiquid investments with longer time horizons. So you take all of that with a grain of salt, but the game is definitely changing here, and I still think we're in the early innings of this entire, you call it regulatory rollout or rollback. I'm not sure which it is just yet. So thank you for coming here, Margaret, and be sure you check out all our other episodes of the video podcast on the Yahoo Finance site and mobile app. We're also on all your favorite podcast platforms, so be sure to leave a comment, and subscribe wherever you get your podcast. We will see you next time on Stocks in Translation.